We have a storm developing in this market. We got oil prices going crazy. We got a war in Iran with our president saying something different every single day. We got a NASDAQ down almost 10% right now. And we got extreme fear on this market. We're going to take you guys through today how you should approach all of this conflict and how to keep your composure and understand what the best moves for you and your portfolio and your family are right now. Let's get right into this video and give you the whole rundown of what's going on today. Right now, we got oil at about $105 to about 108, running around in that range. Sometimes it's down to the 90s. Sometimes it's down in whatever. All we know is oil is up so much since it was before the start of this war. It was up from about $50, and now that it's going down a little bit due to President Trump saying he's going to stop striking all of these nuclear plants and everything in the infrastructure happening in Iran. But we got a market that does not believe him, and we also got him saying they're going to send troops to another island, and we have Iran out here saying, oh, well, if you're going to do that out here, we're going to put 1 million troops against you. Iran has 70 million people. They have a lot of people there, and they have people that will go out and fight. So if troops go there, could this be a huge, long, drawn-out war with possible problems with oil lasting for a long time, and the Fed either not being able to cut rates, or they end up having an emergency cut because no one can spend money on the high prices because they're worried about oil and gas going up, and it leads to an economy that just drops off into a recession. There's so much problems that could be happening with this oil right now, and we're just going to show you right here oil prices throughout the war and these crisis patterns. So basically this here is getting pretty high right now, right? It's about one of the highest we've seen oil spikes ever from any war in the Middle East. So you can see that these numbers are starting to get off the charts right now like they've been, and it's not more that some presidents have had a higher oil happening to them, but whenever you have oil going from $50 to $100, a 100% increase, that's going to weigh on the consumers. That's going to end up being reflected in CPI, which we have at about 2.5 core right now. We have PCE at about 3.1 core right now. And we have PPI at a 3.9% mark. Farther above the Fed's. And the biggest problem is that 3.9% print doesn't even include any of this oil prices happening because it was from a month before the war even happened. So what's going to happen if these 100 plus barrel of oils, a GSG flying, goes into the producers where they're the ones who see it first and administer the prices? They jack up their prices. That's going to eventually hit on CPI and PCE is what should happen if these prices stay elevated for a long time. Let's look at what history really says about what's going to happen right now in this war. So basically, in the Gulf War, oil spiked from 18 to 46, a 300% increase, which is astronomical when the market is happening, and then crashed back once Saudi and OPEC. But the problem is right now, the U.S. doesn't have strategic oil reserves. Could we use Venezuela as someone to get oil? Is that why Trump took it? Possibly. But you have a lot of the countries in the Middle East unable to produce oil. In China and Russia, China's okay with this oil being up. It hurts the U.S. Russia is even more okay. They make so much money from higher oil prices. So why in the world would Russia want to go and step in and end the war and get screwed and ripped off? Another prolonged war was the U.S.-Iran-Iraq war. Oil sustained above 30 for years, the equivalent of 100 plus today. For years. Stagflation risk. What in the world happened in that period? Stagflation. That's the last time we've seen stagflation. So that's a great number to keep in the market and above your head what could happen. Because right now we know unemployment rates have been going up for the last years, right? Inflation has, CPI stayed down, right? Since it's been going down since 2022 highs. But you have a PPI and you have a PCE, especially the PPI starting to tick up from those April lows with those. So could it really go back into the more of economy and you have rising unemployment and rising inflation due to these oil concerns that it might be down the line and a Fed that can't cut rates, so the unemployment gets worse, companies' credit's harder, plus a private credit market that might be cracking, and a lot of levered up companies and these SaaS companies that are forced to sell them off. Whenever you have the big consumers are doing about 70%, so like think of all your rich friends, right? Super rich, like the top 1%, they're doing about 60-70% of the spending. And just what are all the top 1% and how do they keep amassing more and more wealth? They're really, really invested in equities in the stock market. And then whenever their equities in the stock market goes down, they're saying, hey, I'm not making as much money, or maybe I'm even losing a lot of money. I'm not just going to go buy that boat out there. I'm not going to go buy this new house, which stimulates so much in the economy from people have to make in the house, the furniture, everything. And that's why you're seeing stocks like a Bath and Body Works starting to get hammered that has kind of preceded recessions. That's a huge, huge problem. And also, even more like I've been saying, 20% of this goes to the straight. So these prices could just keep surging. Now let's look at the market and the reading investor psychology, which is at least a bright side of this conflict for the most part right now. Right? You have the VIX at 27. It's pretty elevated. It's going up above 30. And it's been staying around there in that 20 to 30 range, which is elevated. There's a lot of fear in the market. So that means a lot of people are starting to get worried. The put to call ratio greater than 1.0 is fear. There's a lot of fear in the market, which is actually good, like we know. That's a bearish signal for people right now. Everyone's going to sell, but whenever the put to call ratio gets high, that's whenever you want to be buying, because everyone's super, super scared. Fear, fear, fear. And that's often near a floor. And then you get a reverse in the market. So that's a good thing that you're seeing this put to call ratio get above 1 recently. That's more and more. And you have a fear and greed index, which is an extreme fear. And like this we have here, readings under 20 often precede recoveries. Whenever everyone is so scared about something happening, it's already priced in the market. Just think about anything that you've learned, right? Crashes bottom 6 months before the actual recovery begins. Because just think about the market, right? If really 75% of people should be bearish right now off something, I'm just saying these numbers randomly out of my head, but 95% of people are bearish in the market, selling everything. That's only 5% more people to turn bearish. And what happens once you turn those 5% of people bearish? No one else is to be bearish. No one else is going to sell off. The only way is you can turn people from the bearish side to the bullish side. And then that's whenever you get the V-shaped recovery. And then at this beginning, people are like, oh, it's not a real. But then eventually it gets back in recovery. And you want to be that person buying whenever there's only 5% of people left to turn bearish, because you're going to be at the start of the recovery. So that's just what things in the market and what the fear gauges tell a story. Whenever you see all of these fear and greed indexes very, very low, you want to be ready to buy, and load up. Because whenever Warren Buffett has to be greedy whenever everyone else is fearful in the market. That's what you have to really imitate, like anything in life. Just think about your life. How many things has there been when everyone's like, oh, that's never going to work, that's not going to work. But you're the only one who knows it's going to work, and it ends out working. That's what you have to view this market as, things in life. Because if you go with the flow and go with the crowd, you don't want to settle to be that middle of the pack person. You want to be the person who outperforms and is ready and is willing to risk their own opinion on the line whenever everyone else says no. That's just a really important thing in the market. And then just last thing we want to touch on is some catalysts to watch, bull and bear case. If there's a ceasefire and it snaps down, bullish, like we've been talking. Energy deal emerges, Fed stays on hold, and the fear and greed gets down. That's whenever you're going to see whenever the market keeps going back and up. And the more, like what even happened if they go for it. The market's already 30%. The average on the market is 10%. You're getting 3 times what the average on the market is. And right now, if you're buying those growth stocks that have been killed by over 50%, you're going to 2x, 3x of stocks coming out of this crash. And your portfolio is going to be looking great, and your family's going to be like, how in the world can you do this? Who were like, you shouldn't be doing this, you should not be doing that. So that's what you just want to be. Now, this war could go longer. The S&P, if it falls 20 to 30, that's a load the boat moment, and the VIX spikes above 40 is really, really, really whenever you want to buy. So honestly, at this point, sometimes you want to be like, hey, if I'm prepared and the market goes lower, I have more money. That's what you kind of want to be at. And the last things you guys need to know right now, oil's up 43% in the market. History rhymes, war end, but inflation could linger for a little bit. So that's an eye to keep on. But if you're getting stocks at great, great prices, while the VIX is at 27 stress, the fear and greed is historically a buying signal. That's what you really, really want to be looking at in this market. That's what you have to pay attention to. This war, it's going to come and go. Stocks, great companies in this market are always going to perform. Like, is NVIDIA really, their GPUs, are they getting hurt by this war? Hell no. No, not at all. That's what you have to focus on. Focus on the business models, focus on these companies, and have a long-term mindset with whatever happens in the market. Thank you guys for watching. Just leave a like and subscribe on this video if you really, really like this and want to see more content. We're going to have you going pretty deep into private credit soon and keeping on that checklist and more strategies for what you should be doing to look at stocks as an investor.